Hi, Assalamualaikum. We are from Group 5 and the company that we chose to apply in our group project is Maxis. We are a group of 4 members, which is Ainul Mardia, Nur Azlin, Marzli Natasha, and Nur Hidayati Aisha. There will be two parts that we're going to talk about in this presentation. In part A, we're going to talk about the operating segment, which is in MFRS 8, and in part B is interim financial reporting, which is MFRS 134.
FAR570 sets out how companies must report information about their operating segments in annual and interim financial statements. A segment is a part of the business that earns revenues and incurs expenses, whose results are regularly reviewed by the chief operating decision maker, and for which discrete financial information is available. The key points here is, first, segments are reportable if they meet the 10% threshold for revenue, profit or loss, or assets. Second, at least 75% of total external revenue must be included in the reportable segments. And lastly, companies must disclose segment revenue, profit or loss, assets, liabilities and reconciliations, as well as entity-wide information about products, services, geography and major customers.
The Chief Operating Decision Maker, known as CODM, refers to the individual or group within a company that is responsible for allocating resources and evaluating the performance of operating segments. This role is typically assumed by the top management, such as the CEO or a management committee. In the case of Maxis Berhad, as stated in the 2024 Corporate Governance Report, the Group CEO, Goh Seo Eun, functions as the CODM by presenting detailed business plans and performance updates to the board for strategic guidance and resource allocation. They review segment performance such as mobile services, fiber and others to make decisions on resource allocation and strategic priorities. Two examples of CODM in publicly listed Malaysian companies. The first one is Public Bank Berhad. In Public Bank Berhad, the CODM is typically the CEO supported by the senior management team. They evaluate the bank's various business segments, such as retail banking and corporate banking, to guide operational and investment decisions. The second one is Petroleum Nasional Berhad, known as Petronas. The group's chief operating decision maker is the Petronas Executive Leadership Team. The CODM role is fulfilled by the Executive Leadership Team, which consolidates segment information to guide resource allocation and performance evaluation. This internal reporting aligns with MFRS 8 requirements, ensuring that segment disclosures reflect how management views the business.
Segmental reporting is typically presented into two ways. First, business or operating segment reporting. The information is grouped by business activities or product lines. Second, geographical segment reporting. The information is grouped by the regions or countries where the company operates. Business segment reporting for Maxis Berhad 2024. Maxis strategic priorities are designed to grow our core businesses, mobile, home and enterprise, and enhance our customers' experiences through personalized, innovative solutions. Snippet, geographical segment reporting. This is just a hypothetical example. Revenue from Malaysia, 10.2 billion ringgit Malaysia. Revenue from other Asian countries, 0.2 billion ringgit Malaysia.
Segmental reporting under MFRS 8 provides financial statements users with valuable insights by breaking down a company's performance into distinct business segments. One key benefit is enhanced decision making. By presenting revenue, profit, and other financial metrics by segment, users can identify which part of the business are driving growth and profitability and which may require management's attention. For example, Maxis Berhad's 2024 annual report discloses segment information such as mobile services, fiber and others, allowing investors to evaluate the contribution of each segment to the company's overall results. This granularity helps investors and analysts make more informed decisions about resource allocation and investment potential. To improve transparency and understanding of the company's operations, segmental reporting aligns with how management view and manage the business, providing users with a clearer picture of the risks and opportunities in different economic environments. Maxis 2024 report includes segment revenue, and profit figures that reconcile to the consolidated financial statements, enhancing users' ability to assess management's effectiveness and predict future performance. This transparency reduces information asymmetry between management and investors, fostering greater confidence in the financial statements. So here is the Maxis Berhad 2024 segmental report illustrative. This breakdown demonstrates how Maxis provides detailed segmental information that supports better evaluation of its business activities. All in all, segmental reporting under MFRS 8 benefits user by enhancing decision making through detailed performance data and improving transparency by reflecting management's view of the business as exemplified by Maxis Berhad's 2024 disclosures.
I'm going to explain about Part B, Interim Financial Reporting, which is MFRS 134. MFRS 134 Interim Financial Reporting establishes the minimum content and principles for recognizing and measuring items in interim financial statements. It applies to companies that publish financial reports on a quarterly or semi-annual basis. The purpose of the standard is to ensure that users of financial statements receive timely and reliable updates on the company's financial performance and position between annual reporting periods. This is particularly beneficial to investors, creditors, and analysts who rely on up-to-date information to assess the company's profitability, cash flow, liquidity, and ability to meet financial obligations. Two notable events that significantly influenced Maxis Berhad's financial position in 2024 were its dividend declaration and share issuance under the Long-Term Incentive Plan, LTIP. Maxis declared 4 interim dividends throughout the financial year, directly impacting retained earnings and cash reserves. These payments reflect the company's commitment to shareholder returns and signal confidence in future earnings. Additionally, new shares were issued under the LTIP, altering the company's share and capital structure and reflecting earnings per share. This transaction demonstrates key changes in the company's equity and cash flows that stakeholders must consider when evaluating performance and strategic direction.
For this task, we selected Maxis Berhad, a well-known telecommunications company listed on Bursa Malaysia. Like all listed entities, Maxis is required to comply with MFRS 134, Interim Financial Reporting, which mandates the disclosure of financial results for interim periods, typically quarterly. Maxis prepares and publishes interim financial reports every quarter. These reports are important because they provide more frequent updates to stakeholders between the company's full annual report. Shows the quarterly reporting periods for Maxis Berhad. Under MFRS 134, companies must present both the current interim periods and the corresponding comparative periods from the previous year. For example, if we are looking at Q2 2024, we must also compare it to the Q2 2023. This comparison helps users evaluate performance over time and identify any seasonal or strategic changes. Each quarter reflects the company's financial position, performance, and cash flow for a 3-month period. This is particularly important for a fast-moving industry like telecommunications, where revenues and cost structures can fluctuate based on customer trends, technology investments, and also market competition. These interim financial statements help various stakeholders, especially investors and analysts, in multiple ways. Monitoring performance trends. By comparing the same quarters across years, users can assess whether the company is growing, stable, or even facing challenges. For instance, a rise in Q2 revenue compared to Q2 of the previous year may indicate successful promotions or increased customer subscriptions. Secondly, making timely investor decisions. Since interim reports are released every 3 months, they offer more frequent insights than annual reports. This allows investors to react more quickly to a company's performance and changes in financial health. Additionally, these reports often include key financial indicators such as revenue, profit before tax, earnings per share, and changes in equity, all of which are vital for making informed decisions. In conclusion, Maxis Berhad compliance with MFRS 134 through its quarterly interim reports enhance transparency, comparability, and timeliness in financial reporting. These reports ensure that the users, such as investors, analysts, and creditors, can make better evaluations about the company's financial condition and future prospects. Our reference for this data is the official interim financial report published by Maxis Berhad, available on Bursa Malaysia.
There will be 2 parts that we're going to talk about in this presentation. In Part A, we're going to talk about the operating segment, which is in MFRS 8, and in Part B is interim financial reporting, which is MFRS 134.